What's up, everyone? It's Karthik with MoneyVest. So what an incredible rally on the day. We've got 6 consecutive days in a row. The markets are green. So this has been nothing short of a very, very extraordinary past few days for the market. So this right here is going to be the mind-blowing data that we're going to break down in terms of market winning streaks. That's what we're going to discuss here. As always, make sure that you drop a like and subscribe to the channel. We are now crossed over 81,200. So thank you so much for helping us achieve this milestone. And the next target is going to be 82,000. So 800 more people needed in order to get us to that level. So share this video, share our live streams, our content, our data with your friends, family, investors, other traders that can benefit from all of this wealth of information. And also definitely do join our Discord and our Patreon community. We do have a few more spots left. With a 16% annual discount, you can take advantage of a lot of other analysis and engagement over there as well. Our comment of the day comes from JL7. Thank you, Karthik, for the consistent updates when the VIX was flashing buy signals last Monday. Hope everyone in this community took advantage. I'm up over 11% since last Monday, and literally both of my phones have been bombarded with messages, again, asking for more information, more data, and again, also appreciating the decisions that we made last week. So link's going to be down below if you want to join and, of course, take advantage of all of these opportunities. And also, I want to wish all of my fellow Indians a very, very happy and prosperous Independence Day. Today is August 15th. It is the 78th Independence Day of India. So hope you all are enjoying and having a great time with your friends and family wherever you are in the world. So just want to mention that as well. So coming over to the markets, absolutely incredible. We had the NASDAQ pushing up over 2.3%. We had the S&P 500 up 1.6% and the Dow Jones pushing up over 500 points. I believe it's a new all-time high for the Dow. I could be mistaken, but let's just quickly take a look. So DJI, we are actually very, very close. Very close. We're less than 1% away. Actually, just less than 2% away from all-time highs. If you come over to the market snapshot, yes, so just a little bit over 2% away from all-time highs. The S&P 500 also less than 3% away from all-time highs, and the NASDAQ is under 6% away from all-time highs. So we are very, very close, folks, getting up to that level, but it's not going to happen anytime soon because this is the data that I really am excited to share with all of you. So this is the market, very, very strong moves to the upside. You'll notice the entire Magnificent 7 stocks here pushing up. Netflix up barely, Google up over 70 basis points, Microsoft over 1%, Apple 1.3%, Meta up over 2%, with the Magnificent 7 index up 2.4%, NVDA up over 4%, Amazon up over 4.4%, AMD up over 4.7%, and the semiconductor index that we have created up almost 5%, with Tesla ripping up over 6% on the day. I closed out my Tesla covered calls last week at a 95% profit, actually earlier this week, and then I closed out my NVIDIA cash secured put for an 84% profit this morning. And then I actually sold new calls on a Tesla today, considering how much it was actually ripping higher. So again, all those trades, options alerts are going to be available. The long-term portfolio up over $13,500 on the day today. So very, very strong momentum coming in. Lots of greenery across the board for a lot of individual stocks, technology, and the, of course, entire portfolio as well. Now, we had over 4,398 stocks advancing on the day, with about 1,333 stocks declining on the day as well. And before we move further, I want to quickly go over this spreadsheet, which I think is going to be super, super important and very, very helpful. So what we have done here is, this was also discussed in one of our previous videos, but I think it's going to be more important now because we've seen 6 consecutive days of green for S&P 500. If you come over to this, come over to SPX, what you'll notice is that we have seen 6 consecutive days. So this right here is the entire rally that we have witnessed for the S&P 500. So have 1, 2, this right here on August 12th. So earlier this week on Monday, the markets were flat. So you can see the gain was 0.00%, but technically speaking, we were up 0.23 points, right? So we were less than 1 point up on the day. So if you were to really look at precisely, we were still up on the day, so technically it was a green day. And then of course Tuesday up over 1.6%, Wednesday up over 38 basis points, and of course today with yet another very strong rally up over 1.6. So on the week, The markets are up 3.7%. Last week was pretty flat. But the bottom line is that we have seen 6 consecutive days of green for the market. So this is a very, very nice winning streak, as you would call it, for the markets. And NASDAQ also in a very similar trajectory and pattern here, up 2.8%, 0.5%, 21 basis points, 2.4%, 3 basis points, and then today up over 2.3%. So this right here has also been a 6 consecutive days of win streak for the market. Now, how does that fare up against historical analysis? So what I've done here is I've gone over to 51 years worth of analysis. So over 12,888 trading days. And what I've learned from this analysis is that the S&P 500 has only seen a 12-day winning streak, which is the longest winning streak, once. Only once in the history of over 51 years of S&P 500, we've only seen once a 12-day winning streak. Now, how many times have we seen a 6-day winning streak? Well, prior to today's close, we saw 117 instances where the markets rallied over 6 days in a row, including for today. And what I've done here is, again, if you come all the way at the bottom, you'll notice that I've included for today's closing price, which is 5,543. That's for August 15th. And market's at 1.6%. You can kind of confirm that here, 1.6%. And this is the 6th day of green. And if you come over to August 12th, you'll notice 0.00%. But my Excel spreadsheet is still calculating for a gain because technically we were up. If I really just kind of increase a lot of decimals, you can see that we were up 0.0043%. It's technically still a green day, as I mentioned earlier. So this is the 6th consecutive green day. So if I include for today's streak, which is the 118th time we've seen this in the last 51 years, because if I just deselect everything, just include for 6 streaks, but right now it's including for both win and loss streaks. So if I just include for win streaks, which is a positive number, which is going to be +1. Now, if I look at all these numbers on the right column, come all the way down to the count, you can see it's now 118. So this is the 118th time we are witnessing a 6-day win streak for S&P 500. So hope that makes sense, because this is all the data that I've already collected. A lot of rows. We're going back as far as 12,890 rows worth of data that I'm analyzing here for you guys. So we can update this number confidently now and call it 118 times, which has happened 1.73% of the times in the last 51 years. So you might be wondering, well, if we've seen a 6-day win streak, what is the probability that we're going to see another green day, which is tomorrow, Friday? Low. It's quite low probability, but it's possible. So trading and investing is all about probability, right? What are the odds of one outcome versus another? So it is possible, because it's happened in the past. We've gone up to as much as 12 days consistently green for the market. So it is possible, but the probabilities are going to go down, right? For us to keep seeing green, it is going to go down. So that is now less than 1% of the times in the last 51 years, we've seen 7 consecutive green days, or in other words, only 55 instances where the S&P 500 has rallied 7 days in a row. So there is low probability now. So if I were a betting man, of course, I had high probabilities for a 1, 2, 3 day win streak. 4, yes, we've seen that 7% of the times. 5 days is getting a little bit up there. 6 days is certainly stretching it a bit. And now, moving forward, since we are already moving past 6 days, 7, 8, 9, especially if you get into double digits, is going to get even more and more rare for the markets. In other words, a red day is coming. So all in all, a red day is coming, considering how much we have moved higher. So the probability is quite high. Now, if you ask yourself, after the 6-day streak broke, right, what was the average or the median loss for the market? If you that's the curiosity that you have. Don't worry, I've calculated that number. So after the 6-day winning streak breaks, the 7-day we've seen on average a down day of almost 0.5% and a median loss of about 38 to 39 basis points. So that's been the average and the median loss for the market once this streak actually breaks after a 6-day winning streak. So hopefully this was a little bit insightful, got your brains going a little bit. But coming back over to the market, this right here is the current MoneyVest dashboard and the positioning overall. 3.79 for the MoneyVest index. Again, getting up to that unfavorable territories, getting closer and closer to 4. Volatility absolutely getting crushed with an epic crush here, down to 15. It's down from 65 from last week. Absolutely incredible. Down back in 34th percentile. The VIX contango, M1 between M2 is now very positive. That is a sign of a healthy uptrending market. So back almost 3% in positive. That means the M2 is priced higher against the M1. There's over 66% of stocks trading back above their 50 moving average and 71% of stocks trading back above their 200 moving average, both of them in the 60 and 62 percentile respectively. The PCC is getting closer to 1. That means the put call ratio still more aligned, more leaning more towards calls versus puts, but we're a little bit higher than where we were yesterday. We were at closer to 0.7s yesterday, but still in the 56th percentile, and the RSI reading for the S&P now at 58 in the 61 percentile as well. So what I would say is the markets are, again, within 3% of their all-time highs. A lot of these indicators are flashing red or yellow. That means there's a very neutral market. Risk reward is not the best. Of course, nothing close to what it was last week, but we are moving higher. And as price goes up, risk goes up. And you know what? I'm actually quite happy that the markets are selling off and moving higher, and we're able to see a lot of this volatility, because what happens is that people tend to forget. So the quicker these things happen, the faster the events happen, the better the memory and the better everyone's going to be trained in the markets moving forward. Because what's happened is that if a bull market or if the rally continues to last for weeks and months, and we're talking about, unfavorable risk rewards, it starts to become the same message over and over again. And people start to think that, Karthik is only talking about the market selling off or a crash or a correction. It never comes, and the markets keep going higher. And then eventually, inevitably, it almost always happens, and we see a correction, we see a pullback, and then the bears sort of come out of hibernation, and they're like, yep, the markets are just going to keep going lower. They're just going to keep going down. There's no end to this. We're going to keep selling off, and there's no point buying. There's no point deploying cash. There's no point putting money to work. Just wait. This is going to get worse. And guess what? We start to recover. And I'm actually happy that this is happening rather fast, that we saw a sell-off, then we saw a recovery, because then you start to kind of see how the markets shift. You see how volatility shifts. You see how different technical indicators move. You see how the Money Invest Index moves. You see how, liquidity frameworks work, how much you can deploy, how favorable the risk reward is, where the contango levels are, where the technical levels are, so that it's all fresh in your memory that, okay, markets do move in cycles, right? It's a good learning lesson for all new investors. And it's kind of interesting because, one of my closest friends, and it's a couple now, so, this guy that I've known for many, many years, him and his wife reached out to me, and, they're actually getting started with investing for the first time ever. They're getting started with investing. And last week, or actually a couple of weeks ago, they messaged me. They were asking, where they can put their money, where can they invest. Especially, considering that they were complete beginners, I especially just mentioned VOO, Vanguard S&P 500 Index Fund, to get started. That's the most simple, most inexpensive way to get started in the markets. Invest whatever you have. And guess what? 1 week later, 2 weeks later, they're up almost 6-7% on their position. But I also told them, don't take this experience and move on for the rest of your life, because this is a bit of a anomaly, because you were able to capture such a nice recovery, such a nice move back higher in the markets, but that is not normal. We are accustomed to seeing 6, 7, 8% on average for the entire year, not for 1 week. So I think it's really important for people to understand that this type of volatility is not normal. It is quite unusual. And at the same time, understanding a lot of these market technicals and understanding the dynamics for risk reward, favorable versus unfavorable conditions, is only going to help you long term. It's only going to train you to become a better, more smart, more knowledgeable, more wisdom investor over the long term. I think that's really what's important here. So contango percentage, just a little bit under 3%. Jobless claims numbers came out, 227,000. So coming in, slightly better than what the consensus was of 234,000, down 7,000 week over week. And retail sales also coming in very strong at over 1% versus the consensus of 0.3%, and month over month coming in at 0.4% versus 0.1% consensus. And this right here, boy oh boy, is what the heat map looks like. NVIDIA up 4%, Microsoft, Apple, Google, Meta, Tesla, Amazon, the entire semiconductor sector. SOXL was just blowing up 15% on the day. So incredible amounts of gains for SOXL, for FNGU, for UPRO, for TQQQ, for all the leverage ETFs. So doing incredibly well. And this right here is all of the greenery in the market. Of course, inverse ETFs were doing very poorly, so all of them were down. TZA selling off fixed income, liquidity flooding out of from the bond market and for fixed income over to equities and their counterparts. So Again, a lot of momentum in international equities, US sector, US equities, all that good stuff. And then again, all 11 sectors were green with the exception of real estate, which was basically flat. And in the last 1 week, again, all 11 sectors are green in the last 1 week. Bitcoin, just over 56,000, Ether just over 2,500. So US stocks jumps as stronger economic data dispel recession jitters. Retail sales suggest consumer resilience. However, some people will make the case that it's very much fueled with credit card debt and just debt in general, as auto loans, mortgage loans, personal loans, credit card debt continues to hit new all-time highs. So many people may argue that we're just kind of kicking the can down the road, and it's a bit of a ticking time bomb where, yes, we're seeing very strong numbers, we're seeing very strong consumer resiliency through retail sales or earnings or whatnot, but this is all backed and fueled with debt. And if that bubble were to burst, things could get much worse. And people can certainly make the case for that. I guess the time will tell, if there's any truth to that. We already know the debt levels are increasing. But at the same time, we're also seeing GDP, productivity, a lot of things, go up. So we're still seeing, very strong economic data points suggesting for, indeed, the consumer resiliency. But a lot of times at the same time, like I said, a lot of it is backed by debt. Walmart earnings are also surging. So Walmart was up almost, nearly 7% after the, company reported some very strong retail demand. Second quarter earnings coming in, topping analyst expectations. Home Depot also rising 1%. Cisco Systems rising 7% after reporting for better than expected numbers. And this right here is something that we broke down in our yesterday's video. So Alta getting bought up by Buffett, Nike winning a place in Ackman's Pershing Square portfolio. And along with this, I broke down a lot of ETFs, the fund managers, institutional managers, and their buys and sells in the last quarter. So I also included for timestamps. So make sure that you do watch this video because I feel like it's going to be super helpful. A few funds, like for example, Renaissance Technology, one of the most reputable and popular hedge funds, institutional managers. They actually sold all of their SoFi stock worth over 5.3 million shares and also did exit Palantir in quite large quantities. And then Clean Energy started a new position in Tesla, picking up 4.8 million shares, and Schwab Charitable Trust 98% in NVDA stock. So a lot of details were broken down in this video. So definitely do check out this video if you're interested in learning more about the second quarter transactions and the moves from institutional investors and hedge funds as well. So coming back over to the market, absolutely incredible and amazing gain on the day. Like I said, SOXL was up over 13.5%, just under $40. Coming back over to SPX, this right here is the breakout that we're now witnessing for S&P 500. So breaking out from this lower high and lower low pattern, that is very, very good to see. And the next target is going to be 55.65. This is something that we discussed during our live stream as well. But this right here is going to be that level to watch. And I wouldn't be surprised if this is the level that we actually get up to and then get rejected. And then you combine that with the win streak analysis. And that's when we actually see a little bit of a pullback from the market. We are extremely overbought, on the 30-minute time frame. Even on the 4-hour time frame, I feel like we're getting up to that level of our side over 64, the MACD, the L3 banker oscillator. So, we're certainly getting up to pretty extreme levels. So I'm going to advise some caution for everyone to be careful, be cautious. Of course, I remain invested. I'm going to start selling some calls now and continue with that frequency of dollar cost averaging every single week, but I'm not an aggressive buyer in this market. Again, coming back to the basics, it is really not that complicated. You have to just simply understand when and how aggressive you can be in the markets. And this is, again, flashing red and yellow, meaning that we can just remain calm, be more patient, stay vigilant for opportunities, and sell calls, hold what you have, take advantage of those gains that we're seeing right now. Just simply sit back and observe and deploy cash when the opportunity strikes. So that right there is going to be that next resistance for the S&P 500, sitting roughly at 55.65. And then coming over to QQQs, very similar pattern. As you'll notice, this is the lower high and the lower low, starting to break out a little bit. And this was the resistance that we were talking about in our previous videos. If you come over to the 30-minute time frame, looks like we're starting to curl sideways right at that resistance of 474, 475. I'm going to increase that just a little bit. I guess, previous support, resistance, we can just increase that just slightly, and that's going to be sitting roughly at around 475 to be precise. And we're right there with a very, very overbought RSI and MACD. Even on the 4-hour chart, you can see how overbought we are now, or getting close to it at over 64.5, with the MACD and of course the L3 banker oscillator also pushing higher. So all I'm going to say is don't get into the recency bias. Yes, this has been a fantastic last 6 days as the markets have carried forward with strong momentum. But as we already know, market moves in cycles, and we can't get ahead of ourselves. We have to be calm, patient, and of course composed, and also humble in our understanding that yes, the gains are fantastic, but the markets can take them just as quickly as they gave them to us. So understanding that, very nice breakout from this downtrending channel. We're now coming up to those resistances for both the S&P 500 and the NASDAQ. So that's going to be level this right here. That's the level that we're watching. That's the level we're hitting up to. And for S&P, that's going to be right here. That's going to be the level. And overall, like I said, this is the overall downtrending channel. We didn't get rejected and sell off. Instead, what we did was we pushed higher, and then we actually broke out of this lower high and lower low pattern. Coming over to Apple, and Apple here now coming up to its resistance of 225. So on the 4-hour chart, what you'll notice is 2 candles perfectly aligned at this doji candle of 225. So it starts to feel a little bit of that resistance coming in play. You can see the RSI, the MACD, the L3 banker oscillator, everything. It's now coming up to that overbought condition, overbought level. And that's exactly why I think it's really important for us to be more alert and cautious here, because we're getting up back to those overbought levels for the market. Amazon with a nice little breakout above this 173, 174 level. So we're going to go ahead and turn this level into a support for Amazon. Resistance all the way up to 189, close to $190 for Amazon. So that's going to be that next level to watch. Support level, like I said, at close to 173, 174 for Amazon. Tesla with a very, very good breakout. So this right here was the resistance that we were talking about. We got rejected yesterday. And then, of course, a very nice breakout above this level on the 5-minute time frame. You'll notice that we had a gap up and then a little bit of that reluctancy at that $208 level. So on the 1-minute time frame, maybe you can see that a little bit clearly. And you can see that boom right there. So on the 1-minute time frame, you can see we broke out, came back up to back test that old resistance as a new support, and then ripped even higher at $214 as this rally continued. So very, very good day for Tesla. It was a day to actually sell some calls, in my opinion. And the support level now is going to stay put at $208. And the next resistance and target is going to be all the way up to $233 a share. But I also want to be very clear, because if you come over to the 30-minute time frame, or actually let's just go over to the 4-hour chart for Tesla. Maybe you could make a case for lower highs over here, and lower lows, and once again lower highs and lower lows. So this could very well be argued as a bit of a downtrending channel still for Tesla. Something to keep in mind. Not saying that it's going to start selling off again. It's going to come back down to 180s, but something that we can of course look at, observe. Next target is going to be 233. Talking about NVDA, and NVIDIA here with a huge breakout about 118. I was struggling a little bit yesterday at around $118. Now that level is going to be a support. Next target up to 139. But once again, without even looking, I can tell you right now, RSI is well over 60. So it's 65 right now. MACD also getting up to those overbought levels, and so is the L3 banker oscillator. So if you came to this channel for objective analysis, when the markets were selling off and there were buying opportunities and the VIX was really, really high, I'm once again going to play the other side and be objective and tell you what the data is telling me, which is we're getting up to overbought levels. Volatility is getting down to extremely low levels. Can this rally continue? Absolutely. The possibility is always there, but we're always trading and investing and making decisions on probability. And that is to say that we are, once again, getting up to overbought levels. The risk reward is starting to diminish as markets are moving higher. So next target and resistance, 139, 140. If you do end up seeing a bit of a pullback, which again is inevitably going to happen, support level for NVIDIA is sitting roughly at $118 for this company. Coming over to advanced micro devices, and AMD also had a very, very strong day. We've already talked about this being a very nice potential trade idea, where the RSI, MACD, and the banker oscillator suggesting for some whales stepping in for the stock. However, AMD is now coming up to its resistance of $151. So this right here is going to be that level for advanced micro devices. If you do get a bit of a breakout, next resistance all the way up to $185 for advanced micro devices. Support level at close to $130 per share for AMD. PayPal also had a pretty solid day, pushing up over 2.7%, just a little bit under $68. Looks like this is the 5th test for PayPal at this level. As you can see that we've gone rejected here multiple times, once, twice, 3 times, 4 times. This is my God, the 5th time PayPal is going to make its reappearance at this resistance of $68. And we're going to find out very soon if it has what it takes this time around. Since the beginning of this year, feels like since the beginning of time pretty much now at this point for PayPal, are we going to break out finally above $70? Or just as always, are we going to get rejected? Probability is against us because PayPal has indeed gotten rejected 4 out of 4 times. So this is the 5th time we're getting up to that level. So $70, that's where we have to gobble up all the supply so that we can push up to 76 or higher. Talking about Visa, very nice move to the upside. However, still in the context of this downtrend, lower highs and lower lows. And this right here is going to be that resistance that it's coming up to at around $266, $270, and still very much within this downtrending channel of lower highs and lower lows for Visa. And again, resistance that it's coming up to at around 268, 269 for the company. Now coming over to Meta platforms, and before we get there, just a quick analysis on Enphase and Netflix. So Netflix here very, very flat on the day. So not really doing much. Support level is going to stay put at 636 and 652. Netflix, I feel like, had a very strong day yesterday when the markets weren't really doing much. But once again, you can see the RSI, the MACD, L3 Becker oscillator, everything starting to come up a bit more on the overbought side, and support level is going to stay put at 636 down to 652. And the next resistance and target is going to be $700 for Netflix. Costco, on the other hand, seeing that momentum carry forward, up over 1.7%, breaking out above its resistance of $872. And the next resistance all the way pretty much to all-time highs for Costco. So that is going to be that level to keep in mind now at almost $900 for Costco. And then finally, if you come over to Enphase, ENPH on this chart, very nice day, up over 5%. A lot of consolidation. And if you do get up to 138, 141, that's going to be that quadruple resistance and that area of supply that Enphase needs to break out of. So both PayPal and Enphase are kind of like in a very similar pattern where they're literally just trading sideways. They're trading in a range, consolidating. They've got a support, they've got a demand, they've got a resistance, they've got a supply, and they're not able to break out of that supply. So that's really what's going to be the main focus for these companies. Coming over to Google and Microsoft, those are the two companies left. And Google here, I picked up Google earlier in the week. Very, very oversold. I feel like there's a lot of potential here. Of course, the DOJ announcement and the potential breakup of this company is what's causing Google to be a bit more suppressed. You'll notice on a day like today, Google underperforming even the Dow Jones, right? So Dow Jones was moving higher more than Google. Definitely goes to show that there's not a lot of momentum and a lot of bullish sentiment for Google. So resistance is going to stay up at roughly at 164 up to as much as 169. Support level down in the 150s. And if we do end up, let's say, seeing a breakout above this level, next target is going to be 174 up to 179 for Google. And then finally, if you come over to Microsoft, and Microsoft also with a very nice, decent recovery from that support level. We talked about this area of demand, and next target and resistance of $432 for Microsoft. So, hope you all enjoyed this video and a complete update on the markets. Don't forget about this chart. This is the win streak, loss streak chart for S&P 500. So, the idea would be that 118 instances of 6 days consecutively green, and now this happens next where we either see on average a median sell-off about 0.5% to as much as 60 basis points, or this streak continues. But the higher we go, the lower the probability of more green days and the higher the probability of a potential pullback, correction, or a red day. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. 16% annual discount that's available until the end of this month. And as always, happy investing. I'll see you all in the next video.